So we often receive questions about the dividends on a whole life insurance policy. Specifically, when someone owns a whole life insurance policy, they're trying to determine what the cash value has grown by each year. So they ask, what did I receive in dividends this year? Or what was my total growth? The thing is, when we look at whole life insurance, the topic of dividends is not straightforward. Oh, how I wish it was, but it is not. So we're going to provide a quick breakdown today. Let's get on into it. When we look at dividends, what we will often see with a life insurance company is a dividend interest rate. For example, if we were to take one of the four major mutual companies, let's take Guardian, for example, their 2023 dividend interest rate is 5.75%. Okay. So if you see a dividend rate of 5.75%, and then you see on your life insurance illustration, or perhaps on your online account, you received dividends of X amount of dollars, naturally, what do you think? Well, the dividend rate produced this much in dividends. Doesn't quite work like that. So here's how it works. If you have a life insurance policy, you also have a guaranteed rate, and that may be at 3%. So before you start a policy, you will receive a life insurance illustration. And on that illustration, you will see a column that displays the dividends over time. Now, the thing about that dividend column, this would be the dividend on an illustration, that does not reflect the company's dividend interest rate. What it reflects is a rate in between whatever the total dividend rate is and the guaranteed rate. So in this particular case, that would be what? 2.75%. Now I'll add that different life insurance products have different guaranteed rates. So if you had a product, let's say with Guardian, that had a guaranteed rate of 2%, for example, their 10-pay product has this, what does that mean? Well, your guaranteed rate, the floor is 2%, the total dividend rate does not change. So when we look at the dividend column on a life insurance illustration, that reflects the surplus, in this case, 3.5%. So we always want to recall, or remember, that the surplus piece, everything above the guaranteed portion, is what represents the actual dividend when I see that dollar figure. Let's look at a quick example. So if we take a look at a full illustration here, we're going to look at an individual funding a policy with $100,000 per year for 7 years, which is a great method to maximize the internal rate of return, meaning net cash value growth rate. And here we go. So what do we see here? Well, first we see $100,000 go into the policy in the first year. You'll see that under the net premium column, 100K in. Here's my cash value. Here's my net death benefit. But here's my end of year dividend column. Let's circle that in blue. What do you notice here in the first year? It's a 0. This will be the case with most life insurance policies, meaning if you have a whole life insurance policy, typically you will not see any dividends paid in the first policy year. Here, in policy year 2, we pay another $100,000 and we see a dividend of $41.68. Now, one thing to note as well is that that illustration reads end of year dividend, which means that that dividend will be paid at the end of your policy year. Now, here's what I want to hit on, though, is when we look at the net cash value, this is really what's most important because this represents the net value at the end of the day. If I look at year 1, I see I have $88,000 in cash value. I paid in year 2, $100,000, and my cash value is $190, which means I got my $100,000 back and about another $2,000, a little bit more. But the dividend column reads $41.68. It's confusing, isn't it? And what you'll find if we look at this year over year, that dividend continues to increase, but you're going to find that the cash value grows at a faster pace. For example, if we look at year 10 here, what do we see? Year 11, the dividend column's $14,507. Your cash value grew by how much? Close to $40,000 when I look at that there. $857 to $894. So what I like to look at here in an effort to provide transparency, because this can be confusing, is if I'm looking at my annual statement or my online portal, I will see from the insurance company, here are dividends that I received. Say it's $5,000. But what I really want to know is what are the total dollars I received, the dividends plus the guaranteed portion. And that might be $9,000, but you won't find this on your online portal or your annual statement. What we do for clients we work with is crunch these numbers ourselves, meaning we look at what did you have in cash value last year, how much did you pay in, and then what is the cash value this year. We look at the dividend, but really we're looking at the total growth. Let's demonstrate real quick. Keep your eye on this column, annual dividends. Look at year 10, it's $14,845. Cash value year 10, $857, death benefit, $2.388. Have those numbers in mind? Okay. What we're going to look at is the same thing. So as we look at this, what do you notice on the left? Do the numbers match up? Yes. Same exact illustration. Here's our cash value over time, 100K per year, break-even point year 4, beautiful. But let's look at that dividend column. Do you remember what it was in year 10? Year 10, there's $14,845. So if you take this policy out, you pay this exact dollar amount in, and the insurance company never changes their dividend rate. They don't adjust everything. It just remains exactly as it is today, which probably will not happen. But let's pretend that happens. We'll see these dividends occur every single year. This is what you'll receive. But is that what your policy is actually growing by? Because if I look at year 10 to 11, what happens here? 857 to 894 with zero out of pocket is how much? It's more than $14,000 and change. So we like to add another column here that isolates the cash value growth. Simply, what is the total dollar amount that the policy is growing by? And here we see it's $33,000 in year 10. Now, why I also like this is due to the fact that it brings transparency in the first year, where I've got that negative hit. Yes, I can see the fact that I paid in 100K and I have $88,000, which is less than what I paid in, but seeing that number in red just screams at me and makes things a bit easier to follow. Okay, worst part about this is the first year. Next year, I pay in $100,000. Assuming this is the cash value growth, here's the net growth, about $22.80. The dividend I received was $41.68, but my net cash value growth, isolating year 2, was $2,279. That's really what I want to see. And then as time passes, what will almost always happen is this. The cash value growth is significantly greater than the annual dividend column. So there it is in dollars. We can look at the same thing if we like to look at the dividend rate compared to the internal rate of return, because the dividend rate is a gross rate, whereas the IRR shows the net growth rate each year after the insurance company's mortality charges, insurance expenses, and everything that comes with the policy. So I can simply see the numbers in terms of net dollars and net growth rate instead of gross amounts, and a dividend that does not represent exactly what the policy is growing by each year. And then here's the same policy with a different PUA rider that allows for a little bit stronger long-term performance. This is more traditional, where I see negative cash value growth in the first and second year, meaning I got less than my 100K back in years 1 and 2. But then in purple, I see the net growth year over year. In this particular case, it's between years 5 and 6 when the net growth actually exceeds the dividend. And then it gets more confusing over time if I'm only looking at my dividend. So the main thing to look at, if I'm you, what I want to know is this. What is the total cash value growth year over year? And we can take it a step further and look at the total gain. So for example, if I paid in $700,000 over 7 years and just let it sit and grow for a while, maybe I'm actively using it, but at age 60, see, okay, I paid in 7. The cash value is 1.4 million and change. At that point in time, the cash value is doubled, a little bit more. So my total gain at this point in time would be what? $735,000 and change. And don't forget about the death benefit at almost $2.7 million that is paid out income tax free. So I hope that this video did help with respect to how dividends work. We do have several videos that really provide more of a deep dive. If you'd like to see those, you can check them out on our channel. But I hope that this video was helpful, and we'll talk to you on the next video. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.